All right, welcome back for another episode of Carnivore Trades. Today is Thursday, December 29th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, markets are having a decent update here. Spiders up 1.9%, triple Qs up 2 3/4, Dow up 1%, and the Russell up 2.5. So a nice day here. Made some comments on Twitter earlier. I did like this pattern here from the semiconductors, up 3.5% on the day. Nice up move and some good bullish consolidation you see there. So that is a good leading indicator going into the final hour. It's about, market should close about 10 minutes. It's also a good indicator going into tomorrow. Now the master level we're watching, we talked about this, almost said Monday, but Tuesday and yesterday on the spiders here is 383.43. And I think we're going to close above that here. And just to go back, that is this red bar high from last Thursday. That was the gap down. We sold off, obviously. Then we had that kind of rounded top that failed. We tried to get it yesterday. We made a run at it yesterday. We failed. And now we've come up here and we've consolidated here just really right above it, essentially. And I think we're going to close above it because the bears have had all day long to push us back below. And all they've been able to muster is these two little red candles that were immediately bought right back up. So it does look like we're going to close above that. If not, that does leave the door open for, I would say, more chop for tomorrow. But it looks like to me that a lot of the selling, end of year kind of selling has abated. And I said this yesterday, a lot of the tax law selling by the big boys was done last week. This week it was retail doing a lot of it. And, we talked about the last couple of days, the retail darling stocks, the Teslas, Nvidias, all that type of thing, taking the worst hit. Apple took a pretty good hit yesterday as well. New 52-week lows, but nice little gap and go today and recovering. That's back above 130 there. Now, we'll talk about Tesla here in a second. We have to. Obviously, everybody wants to know. But I want to talk to you about one thing quickly, and this is why I always talk about volume. I always harp about volume. I said this last 2 days, this is peanuts, 70 million shares on the SPY. That was including after hours. We actually closed at about 55 million shares. And on Tuesday, we only had 51 million shares, including after hours. So that's why I said yesterday, look, this is not a real, don't trust this sell-off. Yes, it's an ugly tape. Yesterday, that was a pretty decent sell-off. We had a nice recovery, and then they faded us again into the close. But when you have this type of light volume, it indicates that, it's mainly just retail and algos. And especially on the sell side. Sell side, you need volume in order to really put conviction into the move. And you can see we just had it, very easy for us to just gap and go today and just erase that complete move. And, we're basically hovering right above that key level. We have 10 minutes to go. I will take you into the close and we'll watch it into tomorrow. Either way, I'm planning on, like I said, a January rally here. And I think based on what I said yesterday, the triple Qs, tech for the most part, are going to be the beneficiary of that. That is, they have the most ground to make up to really back test this breakdown there. You see the 280 level. That wouldn't shock me at some point in January. And I mentioned the kind of rotation here. So a lot of these fund managers have been keeping stocks like Exxon, Conoco, Chevron, the XLE names held up because they want to keep that on their end of year statement. That's why XLE isn't sold off that much. But they're dumping Tesla, they're dumping Apple. Well, if they dump everything at once, they're going to crash the market. And they don't want to do that. They want to have, even if they want the market to go lower, you typically want it to be controlled, right? So you sell Tesla, you sell the hell out of Apple, you sell Nvidia, you sell Microsoft, all these names. But you bid up XLE, you bid up XLV to a lesser extent. And that keeps the kind of equilibrium going. I think that will flip and we'll see a rally, but it's going to be the Qs, led by the Qs, and then, kind of XLE back into kind of corrective mode here. By the way, take a look at XLE today, up 1.15%. XLK, technology, up almost 3%. So you're kind of seeing that flip there. Obviously, led by Tesla today. Nice move here. Gap and go. It did a little pullback, flirted with that 119.67 level, and now we're floating higher into the close. So it does look like some short covering going on here. And again, guys, this is why I keep saying it. Don't buy puts into the hole. Don't buy the fear. Don't buy the hysteria. Twitter was hysterical. YouTube was hysterical. You couldn't find a single good piece of good news. By the way, this morning, Morgan Stanley came out and said, "Oh, what a great opportunity to own Tesla here." That was supposedly the reason that we pushed higher. Wasn't it funny that there was a major dark pool print at 110 yesterday, and we also had that massive bid, and somebody kept supporting it all day long. So I'm not saying Morgan Stanley bought yesterday, but if you told me they did, I wouldn't be surprised. Another thing to take a look at here with the stock is it's it's not the greatest, but there is a possible inverse here. So inverse head and shoulder. There's your left shoulder, head, right shoulder. And if we just take a measured move there, put it up to right there. It's not the straightest line, doesn't really matter. That should take you up to 140, which was your last big breakdown area that we haven't cleared. Well, we haven't cleared this one yet, but assuming we push through that, that would be your next big breakdown area. This is all just selling here. There's a big volume pocket right there. By the way, take a look at the volume here on Tesla this week. So this is a shortened trading week, and we've almost, we have one more day left. That's not out of the question. We clipped last week's volume on 4 days. So I don't know. We're almost green for the week here on Tesla. And I know a lot of you guys have followed me in this trade here in dollar cost averaging. That's the magic of it. If you guys are in carnivore trades, some of you guys are in the money. I'm basically flat on the trade. And that's just how it works. So, any case, Tesla is a real shot in the arm, shot of adrenaline here for the market. It's just, it's lost so much market cap here. As far as a weighting, it's not as much of a weighting as it was, but it's that kind of relief. This is really, it was a gut shot to the market to have it down basically 50%. Actually 60% in like 3 weeks. So for Tesla to get an 8% bid here, it is really helping the market out. I do think it wants to retest 160, 165. That's that 200 moving average there. I told you guys that I do expect that to happen by January OPEX. But in any case, nice little pop there for Tesla getting off the ground. And a lot of these other growth names, you just look at ARK here, today up 5% on the day. Not sure where my ARK chart is. There it is, up 5.25. So they just kind of give you a visual of risk right now. Anyways, so we talked about the Qs, the spiders. Again, I think, the spiders want to go fill this gap here at the minimum. Could it get up to this, this area? That would be kind of max upside for me. Again, the 200 moving average, the down sloping trend line seem to kind of coincide with that level as well. So those would be your max levels. Again, like I said, the triple Qs, I think, have more upside. Because they've just been beaten down more, and a lot of this artificial selling is, like I said, it's tax law selling, so it's essentially artificial selling. Once that dries up in the new year, you'll have nothing left but buyers, and you should get a bid. But triple Q is having a nice rally today, up 2.5 IWM. So we talked about this level yesterday on the Russell. You want to see it stay above 170, 105 on a weekly close. That is getting defended. You got multiple tails 2 weeks in a row there. So we'll see what that does tomorrow. You want to see that level hold here on a weekly basis. The Dow up the least of the 4 major indices, which is bullish. You want to see the Dow up the least. So for right now, that is a bullish sign. Anyways, onto the semis. One thing I forgot to point out yesterday is another reason why I'm kind of looking for a rally specifically in tech is the relative strength here. So we talked about this multiple times, the 50% fib. We hit that, we tested it, we pushed through it yesterday, and now we're getting a nice bid off of that. But take a look at, where the semis are right now, 50% fib from the October low. And look at where the Qs are. Basically just, had to defend that 260 level, very close to the bottom falling out yesterday. XLK, same thing. If you follow the XLK, much closer to the lows here than the SMH. You guys know I love the semis as a leading indicator, and that's showing relative strength. So that does, kind of foreshadow a potential rally here in January, which we are looking for here. But for right now, that 50% fib is getting defended, and we'll just leave it at that. Again, upside, probably takes you up to 215. I don't know if it can get through that though. IGV also having a nice day, up 3%. So another gap and go there. That's been really strong intraday. Just been kind of grinding lower there. A nice pop. I do have this going up to about 265. If it can get through that, then you have the gap fill right at about 269, 270. But for right now, IGV, nice little bid there. And again, a lot of these stocks too, take a look at like Salesforce. Actually, this is actually held up okay, but Maybe some of that tax loss selling was done a little early here, but Salesforce, Adobe holding on. Yeah, Adobe holding on reasonably well. Let's take a look at some of these others. Yeah. So IGV holding up again. It's getting a bid here. We'll look for, like I said, 265. If we can get through that, then 269. Anyways, over to the transports. So we're about to close just above 13,475. Remember, that is the weekly master level we're watching, that inside bar. It's getting defended for now. Tomorrow's close will tell us a lot more. But, it's holding up okay, getting a little bit of a bounce. Let's take a look at Southwest. I've been getting pounded the last couple of days. Yeah, getting a nice little bid there for Southwest, up 3 and almost 4%. So that's almost an engulfing reversal there for LUV. So nice job there to Southwest. Jets actually above yesterday's high, it looks like. Yeah, so nice rally there for the Jets, recovering some of those losses. That is a good sign here for the market heading into the year end. Into interest rates here. So rates basically just backed off a little bit, down 1.34% on the 10-year. We'll see what kind of pattern it puts in, but right now didn't quite get to that trend line. I would feel a lot better if it did. Maybe we could do, you could cheat to, maybe not even cheat, but just kind of redraw it to where the market's respecting. You might even want to follow this now on the 10-year. But either way, getting a nice bid. We'll see if it puts in a pattern. If it does, then it wants to go attack 4%. But for right now, yields having a good week and backing off a little bit today. Same thing with the 30-year. I still think it can get up to 40.50 on the TYX. And then the 2-year here is really all over the map today. But I do not like that close the other day, and I do expect this to go lower. All right, over to Home Builders, XHB, nice little rally there, up 2.5. ITB, same thing. I do think this has another leg up in it, and then it will be time to get into these on the short side. VNQ, nice recovery, up 2%. Basically slightly off the highs. Again, 84 is still resistance here in the near term. It doesn't mean it can't get above that. Maybe go fill that gap there around 86.50, but for right now, your level to get through is 84. Market's about to close here in about 30 seconds. Let's take a look here. The bears are trying. This is fun. Look at the VIXY here. So how many of you guys think JP Morgan is behind this bid right here? Tell me in the comments. And yes, I'm referring to the collar trade. So we got 10 seconds. Let's just watch to see if they do this. Here we go. 2, 1. So they closed it just below. You can't make this up. 383.36. So they closed it 5 cents. No. 4. What is it? What was it? 43.38. 2 cents. 2 cents below that pivot high. I mean, who wants to bet that was JP Morgan right there bidding that VIX up? That's funny stuff. Anyways, over to XLF. Nice gain, 1.42% on the day. Again, this is still starting to put in a bear wedge. Could it go attack this area? Yeah, I do think it gets up there eventually. You got a gap up there as well. But I do not like the fins. You guys know that going into 2023. Broker dealers also having a nice day, up 1.8 on the day. Still kind of a possible little bear flag here forming. So we'll watch that. Oops. There we go. There we go. So we'll watch that kind of pattern going into 2023, but Finn's getting a little bit of a bid with everything else today. Crude backed off a little bit, but did come off the lows. We had an inventory number here. It was a nice dump in the morning. And then around 11, it got a little bit of a bid, and now it's kind of recovering nicely, basically down just 0.5%. Again, I wouldn't do anything with it right here. There's just not enough of a pattern currently. Maybe it could form an inverse head and shoulders on the daily there. So you got your left shoulder head, possibly a right shoulder if you back test that trend line. So something to watch here. But I still am favoring one more dump in crude, at least for the near term or near to medium term. XLE, we talked about that earlier, up 1% on the day, still below this area. I do think XLE does more backing off in January. Same thing with XOP. This is really starting to put in kind of a bearish pattern here as well. You can probably see it on the weekly better. Yep. So that's a weekly inside bar. So be careful with XOP here. I do think this does need to go lower, as does OIH, although it is holding up much better here and really, backed off that trend line yesterday, but it had a nice recovery today. So we'll give it the upside bias for now, but I do think, again, you guys know 250, that has not changed. Nat gas, so really all over the map, backed off heavily today and then came off the lows. We'll see what it does. I prefer a weekly close of back above 475 to really kind of, give it sort of open the door for any sort of upside for next week. I should say, but for right now, it's hanging in there. And if it is down about 20 cents from that level, but 20 cents to nat gas is literally nothing. So it wouldn't surprise me if in the next hour we are at 475. So we'll see what nat gas does here. If it gets through that, it probably wants to go down to about $4. So we'll see what happens there. Actually, there is a level about 425 monthly 200 MA, and then this green bar low here, but it is a monthly level. So, it could take time. It could pierce. So just be aware of that. Anyways, over to the dollar index. So dollar backing off a little bit today, down 0.5%. Still have another leg lower in the dollar penciled in around 102. I think that's a good area of support for the dollar. But for right now, it's just kind of consolidating. Again, if this does push lower, it would kind of coincide with a January effect rally. So we'll see what that does here. But for right now, dollar just kind of range bound and consolidating. Gold, essentially the inverse right now. This does look like it wants to push up to that 1875 area. And it would be interesting, right? 1875, 102 in the dollar. They look about equidistant, right? So that would be kind of a possible little nexus for those two. So we'll be watching that moving forward. Silver, I do think it probably wants to get up to this trend line, which essentially would give you a pierce of 25. And that goes all the way back to that high there, just above 30. Then right here to 27. So we'll see what it does. It is overbought. It's extended. It needs to pull back. So at this point, if you're long silver, I would trail your stop, or I would look to sell into strength here on any sort of swing on SI futures. Platinum, powerhouse move. This thing just, I think I got good levels on it, and I feel like I should take my own trades or take my own advice a little bit more often. But man, really nice bid. So I called that 975 area, the trend line there, 50 moving average. And that's, now up 100 points since then. So big move there for platinum. We'll see what it does on the weekly close. It might back off a little bit. Nice weekly inside bar there. Beautiful setup there on platinum. I wish I'd just take my own advice a little bit more often. But again, this will get up to 1200. So if you want to ride that, you can just trail your stop on the way up. I know some of you guys did take this trade. So again, take profits when you get in the money. But 5% up day there for PL futures. Nice move. Copper basically just stuck in a range here. Again, 496 on a weekly close negates a lot of this bearish pattern here. And then Bitcoin, basically just fractionally higher right now. It's hanging in there, came off the lows here, but not participating in the rally. I do think this is set up for a move down to 11,000, but in January, this could also be a potential January effect as lots of retail. I mean, if there is a retail darling, it's Bitcoin, and I would assume it's experiencing some form of tax loss selling, even though it's not necessarily showing up in the charts per se. But in any case, Bitcoin just hanging in there for right now. We'll see what it does come the new year. Anyways, back over to the spiders. This is beyond comical at this point. Look at what they had to do to VIXI. So again, if you're new, what I'm referring to is the collar trade, JPM's collar trade, short 38.35 call for tomorrow. I guess this opens the door for a move to 38.35 tomorrow. So we'll be on guard for that. Let's look at the book map here. There's nothing really on it right now. I'll be watching this tomorrow. If there's an order open at 38.35, we probably will go there. So keep that on your radar. Either way, after that, I do expect a January rally, regardless of what happens tomorrow. And finally, I will be glad once that trade is closed, because it's literally all I've been hearing about since October. So I will be glad to see that trade finally GTFO of this market. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.